Hello everyone. How are we doing today? Good afternoon. Welcome in. Go ahead, wait for a couple minutes, let people join up, and we'll go ahead and get it started. Hope everyone had a great weekend. Looking forward to another great week ahead, and we'll get on with it. Ashley Elkins, my man, what's up? What's going on? Thanks for joining us today. Hey, Denisha. Hope you enjoyed your weekend. I sure did enjoy mine. Spending time with family, spending time off the charts, and following that August protocol we discussed here at the beginning of the month. Mr. Noller, been a minute, but I'm here. What's going on, man? Thanks for joining us. All right, well, let's go ahead and get into it. Hope everyone had a great weekend. Looking forward to another week of business, and let's go ahead and get into it. So, going into this week, bringing up the economic calendar here briefly. No news Monday. We have FOMC minutes, and then looking at the calendar. Minutes on Wednesday, core retail sales on Tuesday and Thursday. So high impact news drivers Tuesday, Wednesday, Thursday. So I'm looking for some pretty solid price action those days. And then Monday, Friday, no news. So I'll have to look at the market structure we have to work with on those days and see if there's anything of interest. So I'll point to a few things in today's session as to why August price action isn't anything to be too terribly excited about or concerned about missing. And I'll share some of those signatures that we're seeing across all assets, foreign exchange, indices, and cover why my participation is limited in this month in particular. So with that, without any further ado, let's go ahead and get into the technicals. So looking at dollar index on a monthly chart, one thing I want to take our attention to here briefly is how I have been discussing with us for some time now, how we are longer term bullish dollar. I've been saying the 120, 122 is about the number I've been looking for on the upside, and that's simply based off these relative equal highs here. Seeing that order flow is still bullish, all we've done was retrade down to a discount. So now zooming in on this price action on a monthly chart, when we were short all throughout this time looking for lower prices, we targeted the order block, down close candle, and then we also looked at this fair value gap. So this fair value gap here is significant to me because if we were going to rally to these premium levels I'm looking for on a longer term outlook, we should find support inside the monthly fair value gap. And that price action has delivered beautifully. Engineers relative equal lows, make retail, even large fund traders think there's a bottom in, trap those traders short and stop them out. Now they're afraid to go long, they're fearful, and now the market's going to rally. So I did like to see how we purge these lows inside of this discount monthly fair value gap, and now we're rejecting it higher. So with this premise on a monthly chart, that's going to allow you guys to see into why I've been calling this thing bullish even before we had confirmation in quotations, because I already know what I'm looking for in a longer term. So this could be like a turtle soup type entry, which is buying sell stops inside of a discount array, but you have to understand where we're drawing to. And then I've tipped my hand to you guys for some months now, how I have been looking for higher prices on dollar, and how I am seeing this just as a return to discount. So with that context in mind, let's drop down to our weekly chart. So let's take off the monthly fair value gap. Okay. So just overall, not the cleanest delivery intra week looking at intraday timeframes, but expansion higher nonetheless on the weekly chart, exactly as we were expecting. So we had this wick here. I indicated that I wanted to see us just smash through it. I didn't want to see us mess around with consequent encroachment. I just want to see us trade right through it and seek the liquidity above the previous week's high. So looking back so that we can prognosticate forward, I did like to see how we closed above this weekly inversion fair value gap. So the reason I was bullish in here is because of what I was seeing on a daily chart. But now looking at these relative equal lows, we trade down into it, we purged those lows, and then we've rejected it. So when we were trading here, I indicated to you guys that if we were gonna go higher, there's no reason to violate this low because it already did the job of doing the damage and taking these traders out. So it's not gonna retrace and allow them to potentially get back in. It's gonna run to the liquidity. So this is why our attention has been the buy side here on a medium-term outlook these past few weeks. And has the market been consistently expanding higher to these objectives? Absolutely. So seeing here how we have this inversion fair value gap from here, I like to see how we closed above it, used it as support, rallied, closed right on consequent encroachment of the weekly inversion fair value gap, so that midpoint there. And then we traded through it on Monday, expanding higher of the previous week. And then looking at last week, expanding, taking out previous week's high beautifully, and closing above the weekly inversion fair value gap. So one thing that I did want to note is overall clean delivery on the higher time frames. I indicated to you guys that I didn't want to see us trade below midpoint, which is this dotted line. Midpoint of this purple rectangle should not have been traded through if we were to be bullish. And then we saw we opened, we had a little manipulation for power of 3, but we did not get below consequent encroachment, which is a bullish signature. And then we saw that nice expansion higher. No surprise to any one of us. So dropping down into our, well, before that, let me go ahead and share my targets. So longer term, I am looking for us to reprice into this sell side imbalance, buy side inefficiency up here, the CIVI. That's a more longer term outlook. For right now, I'm just going to be looking for the buy side here. Acceleration through that. No real inefficiency here that has me excited, so I'm going to look for the buy side up here at the 104.7 big figure number, assuming we get acceleration through this buy side liquidity here. So looking forward, we should not trade below this weekly inversion fair value gap if we are going to expand higher. So with that, let's refine this into the daily chart. Perfect. So let's contrast previous month's price action with August price action. And I'll share with you guys why it is I'm not too terribly excited about trading these conditions. Because looking at this price action here, for example, when we're bearish, it's overall a clean delivery lower. Bearish order flow, easy to see. We called this thing higher into this breaker and weekly fair value gap. It's just a clean delivery. We called it lower, beautiful expansion with no hesitation, ripping lower. So now let's contrast a clean low resistance delivery contrasted to high resistance, which is typically what we'd expect in August. So the month of August begins right here on this candle, here forward. So looking at this price action where it's low resistance lower, beautiful delivery higher, and it's just nicely repricing to levels. Whereas from August 1st forward, we're just not seeing that. It's a lot of range bound, sloppy consolidation. Can we still call this? Is it still tradable? Absolutely. And you guys see me doing this live in the Telegram group. No hindsight. We're looking at that right edge of the chart. I'm telling you where it's going. And then we all watch it manifest. So there's still trades. There's still opportunities in this. Don't get me wrong. However, this is price action I prefer not to be too active in. And this is exactly why right here. A lot of consolidation, deep retracements, and then eventually delivering exactly where we were expecting. But even with that, there's still precision elements that exist within this price action, and there is still opportunity. So let's go ahead and cover that moving forward. So looking at last week, we opened here on Monday. So I indicated to you guys that if we were to be bullish, I didn't want to see us close below these two dark lines here, which is that daily fair value gap, using it as inversion. I said I would not want to see a closure below that, because if we did, then my attention would go down to the bullish order block. We trade down to it on Monday, beautifully hitting that low as support and rallying to previous day's high here, and expanding into this inefficiency here. Day before CPI, we'd expect consolidation. And then what is the characteristic of CPI, FOMC, non-farm payroll? Those are what we consider disruptors, or news events that disrupt present order flow. So what does that mean? What's present order flow? It's bullish. So who's been making money? People that have been buying this market. So what these news drivers do is they're almost like wrecking balls. So who's been making money? It's going to target those traders. And then what do we see here? Thursday CPI, nasty wick lower, clearing out everyone that prematurely trailed to stop, and then closing right up on the high, continuing the bullishness we were expecting. So throughout this wick, throughout all this manipulation, I'm not concerned because I understand the characteristic of that news event, but then I'm looking at where's the bodies closing. Remember, the wicks are doing all the damage, sweeping below the rejection block and clearing stops, but where are we closing? We saw a beautiful close within the daily fair value gap, and then Friday called the beautiful expansion into the relative equal highs, and then repricing this fair value gap in here. So we have been seeing bullish delivery Monday, Tuesday expanded higher, and then Thursday into Friday did as well. So we are still seeing bullish order flow even in the sloppier price action. So looking ahead, what am I looking at? So this here is a balanced price range now. It's offered both sides of delivery, and then we've repriced through it. So if we are going to reprice to these equal highs in here, we should not violate this balanced price range. And then I'm looking at the balanced price range from this high to low and just extending that through. So this is all efficiently delivered. So I would want to see us find support inside the daily fair value gap that we're in. Notice how we closed above consequent encroachment, which is bullish. So we should find support here and trade higher. If we do get a closure below the daily fair value gap, my attention will go to 50% of this wick. However, I'm not favoring that. I do want to see us rally from this fair value gap in here, shoot higher into the buy side, and then animation through that. My attention goes to the rejection block here at the 104.3s, let's call it. And then through that, we'll go ahead and look at the buy side through here. So those are going to be my targets on the upside this week. Buy side liquidity, rejection block, and then the swing high here, assuming order flow continues bullish. So that's what I'll be expecting for dollar index on a daily chart. Now let's drop into our 4-hour. All right, so let's drop into the 1-hour. Nothing terribly exciting here on a 4-hour chart. So looking at last week here, Friday traded lower, which is non-farm payroll, as we discussed. Those are disruptor events, so it cleared out the stops. So what we saw here was we traded into a short-term discount from high to low, and then this line here is equilibrium. So taking this line off, we see we traded into a short-term discount, and I indicated to you guys that when the markets are bullish, market makers do not like to keep price and discounted valuation for very long. So I used that logic to call the market this week. I shared that if we are going to be bullish, price should not hang around discount valuation, and we should rally higher. And then we saw that into this week. CPI doing the damage and then continuing the expansion higher. And then I do remember sharing a call out, which I shared with you guys, that we trade down to this fair value gap in here and then rip into the equal highs here. And then we saw that beautifully deliver. So like I said, there's still precision elements. There's still opportunities in the marketplace. However, this price action that's just kind of sideways, sloppy, isn't anything I'm too terribly interested in, as I discussed. So going into this week, this is already efficiently delivered as I outlined, so we do not need to retrace very much. So like I said, I do want to see us rally from this daily fair value gap in here. So I do not want to see us get below this swing low in here. I'm classifying this as an intermediate term low. And then for those of you guys that have been with us for some months, you guys see we frequently call the high and low of the week. You know, we classify an intermediate term significant structure point, and then we're able to call the high and low of the week based off that. And then that's how you get your one shot, one kill, your swing trade setups in the week with using that logic. You have to understand market structure with narrative, and then that's how you're able to take advantage of one shot, one kill opportunities. So going into this week, I do not want to see us trade below this low in here. And I would like to see us rally from this daily fair value gap into the premium levels that I highlighted. So we'll be looking at something like this, trading lower, hit consequent encroachment, and then rally higher is personally what I'll be looking for going into this week on Dixie. So with that, let's go ahead into bonds. And then as you guys know, I'll start covering Euro for you guys. Mad Joker, hello from Spain. What's going on, my man? In the weekly chart, Dixie Futures chart has mitigated the BISI. Okay. Earl Garrison, my man, hello from Lake Tahoe. What's going on, brother? Hope you're enjoying it out there. All right, so T-bonds monthly chart. So why am I bringing up a monthly chart? Because this longer term prognostication allows us to forecast intraday price moves much more cleanly. So looking at T-bonds on a monthly chart, we can clearly see we're weak. So which is why we're seeing interest rates spiking and why we're seeing dollar rally with it. So I was able to forecast a rally in dollar by simply using bonds to qualify it. So seeing here on a monthly chart, order flow is clearly bearish. Trade into this fair value gap here, reject, fair value gap, and then trading into this fair value gap, and then we've been calling this thing lower. So where I think we're longer term headed ultimately is to these equal lows here. But just looking back, we traded up into this fair value gap, and then we've rejected. And then no surprise to us, we've been calling it lower. But look at the signatures that exist on a monthly chart that indicate this to us. So one, we have the inversion here, keeping price at bay beautifully. And then once we've rejected that, we see a immediate rebalance here where this candle's low, this candle's high trades up to it, rejects. So it's no surprise we're seeing this animated delivery to the downside, given that we have the necessary signatures to support that bias. So we saw immediate rebalance, and then now it's running aggressively for the sell side below this low, as we discussed last week. And then now we're seeking the sell side below here. So going down into our weekly chart, overall beautiful delivery on bonds on the higher time frame. So seeing how we rejected this inversion, traded lower. And then what did this week do? Typical power of three. We opened, manipulated into a premium, traded into the opening price of the bearish order block, and then rejecting lower for the 50% of this wick. And then what I'll be looking for going into this week is previous week's low as the first target, and then this low here at the 119.15s, and then through there I like 118.31 for the relative equal lows, which would be external range liquidity. So that's what I'm looking for on bonds on a weekly. And then going into our daily chart, beautiful bearish order flow, rejecting this inversion, fair value gap here, displacing lower, taking out these equal lows as we were expecting, which gave me that bullish bias on dollar, and it delivered like gangbusters. So looking at this here, this inversion, fair value gap in yellow or orange, extended that through, saying how I didn't want to see us get above it if we were to remain bearish. And then what did price do this previous week? We traded up into a short-term premium, being this fair value gap and weekly bearish order block, keep in mind. And then we rejected that lower, seeking the discount levels that we were looking for. So going into this week, like I said, expecting bearish order flow to continue. So my first target is previous week's low. Then we have these equal lows over here as target 2 and 3. So assuming we get this on bonds, I will continuously be expecting higher dollars on Dixie. So with that, let's go ahead into the interest rates just to qualify this. So beautiful delivery. So that's an old target we had. So we've been bullish. I qualified it from the SMT we saw all the way down here between the 30-year and 10-year. Here, so we saw the SMT. So while 30-year is making lower low, the 10-year yields were unwilling to. So we're seeing that bullishness as a result. So we had targets being this inefficiency here. We repriced that beautifully. And then we had the buy side here, and then we traded right up to that and retraced. So I love seeing this type of signature when I'm bullish. I like seeing the market makers manipulate traders into thinking we've seen a top, whether you're internalizing this as resistance or a double top pattern. I love seeing that, especially if I'm bullish, because that means you're going to ram it up into that liquidity, which gives me a clean target to work with. So looking at this fair value gap here on the daily chart, extending this through, we traded down, bodies supported at consequent encroachment perfectly, trading into this fair value gap, and then rallying higher, seeking the buy side. So I'm going to expect this to continue. Going into 10-year yields, same thing, buy side liquidity, traded down into the bullish order block in here, bodies respecting that handsomely, and then continuing the expansion higher. So dollar is going much higher as a result of this, and that's what I'll be monitoring going forward. So I am expecting risk off to continue, which is lower foreign currency and lower indexes. And just before we transition into indexes longer term, I'm expecting indexes to get smashed lower. So that's what I'll be looking for in stocks. Honestly, just looking for them to crater based off all these signatures that we're seeing in the market. Neo, greetings from Vegas. Neo, thanks for joining us, my man. All right, so let's go ahead into Euro briefly. So as you guys know, Euro is going to be the same thing as dollar index. So volume imbalance, trade up into that, rejected. So I took our attention to this balanced price range here last week and said that if we were to remain bearish on Euro dollar, we should see us reject from this balanced price range. We traded up into it, not even able to rally to consequent encroachment, indicating what? Bearishness. and then smashing lower beautifully back into that weekly inversion, just as we expected. As we were bullish dollar, we're obviously going to be bearish on foreign currency. So seeing that rejection smashing lower, I'm expecting that to continue as long as we continue to see lift on dollar. So I took our attention to these 3 higher highs and indicated how it's a 3 drives pattern, and I was treating it as such, which is why we've had a bearish bias. And then we've seen each week following that has been lower delivery. So with that, on a weekly chart, I want to see us accelerate through this bullish order block and inversion. So here we have the purple rectangle, which is the inversion, and we have this down close candle. So what I want to see is price smash through this, show no regard for it, and then seek the liquidity below here and into this inefficiency is what I'll be looking for going into this week. Obviously, assuming we get lift on dollar. So looking at the daily chart here for euro dollar, we have this balanced price range traded up into it, like we discussed, not needing to trade up to the high end, smashing lower. And then we had this daily bearish order block that we've been monitoring for the past couple weeks. Again, this is that typical August price action, sideways, frustrating the traders that aren't expecting this, which we all were. So we're not caught off guard or surprised by really anything the market does. It's all old hat. So with that, going into this week, I did like how we traded up into this opening price here, bearish order block, and smashing lower. So as we discussed, CPI, it's going to be a disruptor. Who's been making money? Shorts. So what it do? Reprice to the buy side here, and then rejected it continuing lower. So as long as you remain below this bearish order block, I am bearish. And as long as we remain above this weekly inversion fair value gap, we likely consolidate. So what I would like to see is speed down through this purple rectangle, which is that weekly inversion. And then I want to see us come for the sell side below here, obviously wanting to see dollar rally in perpetuity. So with that, nothing much more here. Let's look at the hourly. Perfect. All right. So we qualified this fair value gap here as a breakaway gap for some time, discussing how we didn't want to see price trade into here, and we did not. So still seeing that call out paying. So looking at this intermediate term high here that formed on Thursday, I am looking for that to be a significant high. Reason being, if we are bearish, this high already did the job of doing the damage and taking these traders out here. So anyone that was short that prematurely trailed a stop loss was taken out, and then we displaced lower, continuing bearish order flow, repricing into the fair value gap, selling off, which is what we saw the inverse of in dollar. So going into this week, I do not want to see this high violated. So I will be looking for open, trade into this bearish order block potentially, and then reject lower into the sell side, and then go into a 4-hour. I discussed with you all how I wanted to see us complete this market maker sell model and trade into these relative equal lows. So that's what I'll be looking for going into this week, assuming dollar continues higher, of course. So with that, I think that's all for Euro. Let's go ahead into indices, then I'll take a few questions and then let everyone go ahead and enjoy the rest of their weekend. All right, so let's get on S&P. So looking at the weekly chart here for S&P, trading up into this weekly volume imbalance as we were looking for. Midpoint, which is indicated by this dashed line, was unable to be traded to, and consequent encroachment of this wick indicating weakness. So we covered this live for you guys, and then we're seeing down close candles on a weekly chart as a result, which is what we were already expecting. So we traded down into this propulsion candle here, traded into about 50% of it, and that's where we stopped for the week. So assuming we're going to continue bearish, I want to see us get through that with speed. Real quick though, on a monthly chart, just what I'm looking at longer term, we have this inefficiency in here. So indicating it with this rectangle. That's where I'm looking at us repricing to on a medium term outlook. And that's reasonable to expect. We've had 1, 2, 3, 4, 5 months of continuous bullish delivery, which we were all over. And then the shorts from the previous couple weeks, we were all over that. So where I'm expecting we're drawing to longer term is this inefficiency here on a monthly chart. And then touching on NASDAQ briefly, I'm seeing the same thing for NASDAQ, but it's already delivered, and it's much weaker than S&P. As we discussed the SMT, quarterly shift, we discussed all that real time. So looking at this fair value gap here, same thing on S&P. We've had 1, 2, 3, 4, 5 months of continuous higher prices, which, like I said, we called it, and we were all over that. And then we repriced to a higher time frame premium objective. So some measure of retracement is to be expected. We hit that monthly fair value gap, rejected, and then repriced into that monthly fair value gap, which I shared as a live update in the Telegram group. And then the market delivers it like gangbusters. So looking forward, we have the rest of this monthly fair value gap. So what I'll look at is consequent encroachment, 50%. Call that 14,900. And then I'll look for the low end to be repriced. And then through that, I like the lower monthly fair value gap, but let's not get too far ahead of ourselves here just for this coming week. So down to a weekly chart, as I said, bearish, traded down into this propulsion candle. So assuming bearish order flow continues, I do want to see us trade into the sell side liquidity here. And then another bearish signature, actually, before I transition to NASDAQ, is how we closed here. We closed below this fair value gap. So if we were to want to see higher prices, or if someone was thinking we were bullish, that's now been invalidated by a closure below this fair value gap. So going over to NASDAQ on a weekly chart. So here we have that purple rectangle, which is that monthly fair value gap. And then we have the equal highs here. So traders that were short, they feel safe with the stop loss there. And then the market's going to reprice right to there to capitalize that liquidity. And then we're seeing how we're rejecting the monthly fair value gap, but there's also a weekly breaker here. Traded up to the high of that beautifully, and then we're rejecting lower. So looking at NASDAQ here moving forward, previous week we traded into this candle's low, which is that bearish order block on a weekly chart, but it's also immediate rebalance because it opened, traded higher, left no room for inefficiency, and then smashed lower, showing no respect for this down close candle, which we'd want to see if we're bearish, and then traded into the sell side liquidity here, which we were calling for you all real time, and then we traded it ourselves, as you guys can see in our executions. So it's something to call the market and say where it's going, but it's another thing to call it and also trade it, which is what we're doing here. So beautiful delivery lower into the sell side. So moving forward, because we had immediate rebalance, because we rejected the bearish order block and monthly fair value gap, I will be looking for the sell side liquidity below here, and then animation through that, I will be looking for the volume imbalance and sell side, or BISI, buy side imbalance, sell side inefficiency. So dropping down into our daily chart. So what I want to take our attention to is the contrast between the price action on S&P and NASDAQ. So here we saw S&P continuously making higher highs into the purple rectangle, which is that weekly volume imbalance. But then we saw that NASDAQ was unwilling to do so. NASDAQ was not making higher highs while S&P and Dow were doing so. So we saw that SMT in a premium. We got that displacement, qualified this as a market structure shift real time, traded up into the fair value gap and rejected. So seeing bearish order flow, repriced into the inefficiency we were looking at last week and the discount inefficiency we were also looking to, repricing right to midpoint of this fair value gap in here. So completely random delivery. And yep, so bearish order flow, trading into the bearish fair value gap, order block, and trading lower. So what I want to take our attention to is how NASDAQ has been delivering much more cleanly on the downside, which we were already expecting because the weakness signatures that were presented in NASDAQ that did not exist in S&P. So looking at S&P and contrasting it to NASDAQ, we see here that NASDAQ did not make a higher high, and it's been much more weak. It's already repriced through these inefficiencies and taken out the sell side liquidity. And we see much cleaner market structure. Here we see this up close candle, bearish order block, trade up into mean threshold, and then reject lower, seeking the sell side aggressively. And we're just not simply seeing that same follow through on S&P. So the market's indicating everything it's going to do before the fact. You just have to know how to read it. So if looking to go short the past couple weeks, what would be the better shorts, S&P or NASDAQ? Obviously NASDAQ. Can you still find profitability with S&P? Absolutely. You're just going to get more bang for your buck trading the NASDAQ. So looking at S&P, just how we were discussing on that bearish order block, you see how we repriced all the way through it. A little bit more sloppy price action, but we did just reprice to 50% of this wick, which is about right here. So expecting bearish order flow to continue into the coming week. So we've traded down and closed below midpoint of this fair value gap in here. So if we are to continue bearish, I do not want to see us close above this fair value gap. So I want us to see us become weak and continue lower. So on the downside, I'll be looking for previous week's low here, repricing this entire inefficiency, and then animation through that. My interest is in the sell side liquidity here on S&P. And then with that, let's go into NASDAQ. I'll share my targets. So we have the sell side below here, and then we also have the low of this rectangle, which is that monthly fair value gap. Animation through that takes us into these equal lows here, which is what I'm looking at on a more medium to longer term perspective. So I do have that higher time frame clarity on indices. So first target would be the low here, repricing this entire rectangle, which is the monthly fair value gap. And then through that takes us into these relative equal lows in here. So that's what I'm looking at to manifest within the next couple weeks. Looking at last week's price action in here, Monday, if we're bearish, what do we want to see on Monday? Some type of manipulation. Monday manipulates higher, and then each day trades lower. Rejecting premium arrays. So here we have that monthly or daily fair value gap, trade up into it, reject, and then note how the bodies here close below the fair value gap. So many of you guys are wondering how I do the wizardry, how I do the voodoo and the telegram, and it's simply using all these things that I'm sharing with you all here. It's nothing special. So seeing how we close below this daily fair value gap in here, look at this body, how it beautifully respects it. Remember, wicks are doing the damage. Bodies tell the true narrative. So how was I confident going into Friday telling you guys that Friday's expansion was going to take us into the sell side here and into the monthly fair value gap? Well, it's because we closed below it and we're seeing bearish order flow. So I'm expecting it to continue. So Friday's going to want to likely satisfy the weekly objectives, trades up, manipulation, and then smashing lower into the targets that we were all looking for. So overall, beautiful delivery on NASDAQ. And then looking at the August signatures, how it's just overall sloppy. It's just not really accelerating lower. So yes, it's trading lower to levels that are predefined that we're already looking for, but it's just not really accelerating. For example, here when it's bullish, it's beautiful delivery. And then when it's lower, it's delivering nicely until we get into August, which has just been more choppy consolidation. But with that, look at the potential opportunities that existed last week with what I provided. If we're looking for lower prices, something that I teach is that there's consistent setups looking at previous day's highs and lows. So if we're bearish, are we going to be looking for previous day's highs or previous day's lows? Well, obviously previous day's lows. So looking after Monday, when we expect the initial manipulation to come into the market, what do we see each day does? Tuesday sweeps previous day's low. Wednesday takes out previous day's low. Thursday does the same thing, and then Friday does the same thing. So if you know the bias, there's fresh setups continuously just looking at previous day's highs and previous day's lows. So each day, if you go into your charts and backtest this, you're going to see that there was setups into previous day's lows each day of the week, using the bearish bias that we were all looking for with the bullish dollar. So with that, going into this week, I shared my targets for NASDAQ, and then let me share for S&P. Like I said, repricing into the low, sell side here, and then sell side there has my attention, assuming we get animation through this sell side liquidity here. So that's all I have for S&P. Let's drop down into an hourly chart. So this is a significant high here. Would not want to see us get above this if we are to be bearish. If we do, it likely means we consolidate further. But overall, just looking at the August signatures, yes, sell setups are there. There's opportunity, of course, but it's just a lot of sideways range-bound price action. And then we also had this confirmed to us, seeing how we were consistently trading and gravitating to new week opening gap. So because the algorithm is not repricing sharply away from new week opening gap, we typically expect a more range-bound consolidation type week. So people trying to hit home runs, look for big runners, it's just not likely going to manifest in the month of August. And when we're seeing these signatures and price action, which is price continuously gravitating to new week opening gap, and key liquidity and inefficiency. So going into this week, like I said, we can manipulate higher, but I do not want to see us close above this daily fair value gap, which is the purple shaded rectangle. We can trade higher up into it, but then I want to see us reject sharply and trade lower, obviously assuming we get that bullish dollar as we're looking for. So on NASDAQ, seeing the same thing, just much cleaner structure on NASDAQ, looking for shorts, but this is that key high I don't want to see us get above. We can see a bit of manipulation into this daily fair value gap, and then I want to see us reject from here and trade lower into the discount objectives that we're looking for. So with that, that's everything that I had here to cover. I'm going to go ahead and take a few questions, and then going to go ahead and get going. Awesome. So I had a question to look at the grain markets. So let's go ahead and do that. Oh, and then just covering crude oil real quick. Beautiful delivery into the relative equal highs that we've been looking at from the low 70s. So low 70s into the mid 80s, calling that handsomely and it beautifully delivering. Hold on. I believe there's an issue with the screen size. Hold on. All right, that should be good. All right, sweet. So yeah, just seeing that continuous bullish order flow. And then I did cover this at length, reading the order flow, classifying a measuring gap in real time. I said I didn't want to see us trade into this, and just overall beautiful delivery on crude oil, bullish as we were expecting. So with that, I believe my man AB wanted me to take a look at the grain markets. So let's go ahead and cover that real quick. 8 BP trick shots. Can I look at gold? Yeah, I'll take a look at gold briefly. And then does ICT work on crypto? Absolutely. All right, so taking a look at the grain markets real quick. So corn bearish, we just took out sell side here. So looking a little further ahead, we do have sell side below here, which I will be interested in, assuming bearish order flow continues, which we are seeing. So looking at this here, we traded up into the fair value gap here, rejected that lower into the equal lows. So scrubbing back here a little bit, we have the sell side below this low here that has my interest. So with that, that's all for corn. Just expecting that bearish order flow to continue, and then wheat is what does have my interest because I do remember calling this market. So I believe it was David. Yeah, David asked me in the Telegram, and then I covered that. So I covered you guys that if we're going to remain bullish, we should be supported here by this bullish order block. We closed below it, and then I took our attention to this fair value gap, indicating that we would rally short, rally to the fair value gap to then sell short. So looking at this here, we traded up into the fair value gap here on the daily chart, and then we rejected it going after the sell side here. So overall, beautiful delivery here, and then all over the grain markets. If it like we told you guys before, if it prints candles, we're all over it. We can turn it into gold. So with that, seeing that bearish order flow continuing here, seeing that immediate rebalance, rejecting. So my interest in the wheat market is the relative equal lows here as the first target. Through that, I like this inefficiency here. And then animation through this inefficiency takes us into 50% of this wick. And then through that, I like the sell side below here, assuming we continue accelerating. So those are my 3 targets on the downside for the wheat markets. And that's what I'll be looking for going into this week. All right, so with that, I don't see any member questions in here, so I think we're going to go ahead and wrap it up here. All right, so appreciate everyone joining us. Going to go ahead and wrap it up. Denisha, thanks for taking time out to do the analysis. Have a great week. Thanks for joining us as always, Denisha. Hope you have a great week yourself. So as I said, don't believe we have any member questions in here. And so going to go ahead and keep it moving. So you guys have a great rest of your weekend. Looking forward to great week ahead. So with that, everyone, take care and be safe.